Hello again, fellow BeachBum traders. We hope that you had a great trading week last week. We hope that you found our weekly game plan from last week helpful to you in your trading. Please let us know if you found our weekly game plan from last week helpful to you in the comments below. And please let us know how your trading went this week. Good or bad, what did you learn? How can we improve our weekly game plans to help you succeed in your trading? Now let's get started preparing our game plan for next week.
Hello again, fellow BeachBum traders. Welcome to our BeachBum weekly trading game plan for the week of November 8th through November 12th. We got our taper, but we got no tantrum. So the Fed did announce that they would begin tapering at the end of November already, but the markets expected it and pretty much shrugged it off and continued higher. And we'll talk about that in more detail. But I wanted to start off this weekly game plan a little different, and I wanted to show you the CNBC Investing Club email that I got on the 5th, which was from Friday. And this comes from Jim Cramer's Investing Club, and it's what we learned this week and what we're watching next week. And I thought this was a great summary of the economic data from this week and what to watch for economic data, etc. next week. It's a great summary of that information. So probably going forward, I will let Jim Cramer do that summarization. I might add a few observations of my own to that, but if you have not already signed up for that Jim Cramer's Investing Club emails, you can do so at this link, CNBC/Investing Club, and I will include this again in the resources box, in the description box below, so that you can quickly and easily get that information, and we'll talk about that in more detail later. So let's just look at that email real quick and get a summary for the markets from last week and the economic data. I'm going to go very quickly because, again, you can get this email, but if you haven't signed up, maybe you didn't get this one yet. So, as you all know, the markets chugged along to all-time highs on a pretty regular basis until we got to Friday. Shrugged off the Federal Reserve tightening. Again, we got a taper, but we got no tantrum. So, we got positive Pfizer news on Friday, and the markets reacted to that. He points out it was led by consumer discretionary and information technology, materials, healthcare lagged. So, dollar index up, gold broke 1800s. We'll look at that in the futures a little bit. Oil kind of hovered in the 80s. We'll talk about that in more detail, and we'll talk about the treasuries and how that reacted. That was counterintuitive, particularly on Friday. We'll talk about how we can play that counterintuitive move in the treasuries, even though we're getting this tapering. So again, to go really quickly through the economic data we got this week. Again, I think this Jim Cramer's summary is great. PMIs, macro, edging out, so it was above expectations, expansion for manufacturing. Then we got employment data, and shows employment increased ahead of expectations. So we're seeing the improvement in the labor market, and again, there'll be a lot of discussion on that. And we also got more manufacturing data well ahead of expectations. And then, again, manufacturing better than expected. So all the indications in manufacturing are better than expected. Employment data was better than expected. The only thing, another theme we'll talk about is that some of these may indicate higher than expected inflation and how that might cause the Fed to act going forward and how that may impact the market. So we'll talk about that. That's a theme we want to think about and talk about is higher than expected inflation. And again, the jobs data was better than expected and revised for the past better than expected. So again, I think there's a great summary. All in all, very positive for macroeconomics, economic activity picking up, job market strengthening. Still have major supply chain issues, and we're going to spend a lot of time talking about supply chain issues and how we can position to take advantage and avoid issues with that. So then in terms of economic data for next week, again, he has some earnings focus more on the investing club. We may briefly look at the earnings calendar, but then he's got a great summary again of the economics data, major points for next week. Not as heavy, not as major as last week. It's sentiment data again on Friday, but that tends to have less of an impact. So I thought this was a great summary of the major economic data from last week, the major economic data upcoming for next week. So I'd highly recommend that you subscribe to Jim Cramer's Investing Club. Get these emails. There is other information he sends about trades that they're going to make before they make them, which is very helpful. And on a daily basis, he produces kind of a game plan for the day. So again, very helpful information. We've been receiving it for a while, and I've been using that on a daily basis for updating our watch list. So we'll start digging into, okay, how did this data impact the markets, and then how do we position for next week, the week of the 8th through the 12th, to take advantage. Okay, to just add some really quick commentary on my interpretation of some of the economic data to add to what was in Jim Cramer's email from last week is Monday, construction spending was a little negative and lower than expected, so construction slowing. On Tuesday, nothing, I didn't have any notes. Wednesday was the big tapering announcement that everyone was positioning for, hedging for. We got the announcement of the taper, but we got no Tantrum on Wednesday. But they did announce they're going to begin tapering starting in November, which was a little bit of surprise at the quick start to the tapering, and they're going to increase the tapering in December. No change to the interest rates, which was expected, and the tapering, again, is expected to be reduced similarly each month. So right now, the pace of reduction of purchases is expected to taper off proportionally each month and complete by mid-2022, so ballpark June-ish of 2022. So again, right now they're saying it's a linear taper. There has been some discussion that the hot inflation may increase the tapering rate and cause them to taper faster. And there's discussion of when will they start hiking interest rates after that. Now they've said they don't even want to talk about interest rate hikes until they finish their tapering, and people don't expect any interest rate hikes till after they finish the tapering in mid-2022. But again, there's a lot of discussion right now about whether the hot inflation is going to cause them to have to accelerate that timetable. So we will see how that plays out. Thursday, one of the notable pieces of data was productivity was worse than expected. So we've got increasing or better than expected employment. So continuing jobs claims was better. We have other data that says the employment, jobless picture is getting better, but productivity is worse than expected. Also, wage increases were high, so more people are working, they're getting paid more, but productivity is going down. That doesn't bode well. Also, trade balance was worse than expected, and then OPEC decided not to increase their oil production more than what they already are. And so oil prices initially kind of dropped. I think it dropped below 80 for briefly, but then now it's a little above 80 right now. So we'll see how that plays out in a minute. And then again, Friday we saw the jobs report was better than expected. Again, there's the link. I'll put the link in the description box so you can see the earnings calendar in investing.com in detail and watch that. It has a nice, red-green. We're better, they're worse than expected as these economic data come in. And also, I'll put the link for the earnings calendar. There's still a ton of earnings reports this week. I'm not even going to try to go through them all. You can go to this link in investing.com. Again, it's easy to get to. You just go, market, stocks, earnings calendar, and then you can go the day, week, etc. There's just a ton, and it's a broad range of different companies in different sectors, and so I highly recommend you watch and listen carefully to these earnings as they come in, and are they better or worse than expectations, and how does the market react? That's the key. Is if you get an irrational market reaction, the earnings are good and it goes down, or the earnings are bad and it goes up, does that open up an opportunity? And even if you don't catch an opportunity, somebody reports better than expected earnings, it starts to pop. There's potential for sympathy. Other companies in that same sector, if they haven't moved yet, people are going to interpret, okay, if this company in this sector were business had positive earnings, maybe other companies that haven't reported yet in that sector are also going to have positive earnings, and there may be an opportunity to catch those ahead of time. Similarly, on the downside, if somebody disappoints, you can expect other companies in that same sector to start, dumping, because people are going to assume they're going to have bad earnings as well. So listen, watch carefully for these opportunities. Sometimes these are the best opportunities if you get an irrational reaction. So I hope that helps. Now we'll kind of jump into some of the futures and look at the trends and then pick our stocks to put on our watch list for next week. Okay, let's talk about some of the major trends that we see, some of the future themes, and some strategies of how we can position ourselves to benefit and profit from these trends and future themes. So the big theme right now, after the Pfizer news, Pfizer pill, and former FDA Commissioner Scott Gottlieb said pretty much the pandemic as we know it is over. Pretty much his statement. The reopening theme was already huge, and it's just accelerating based on that news. We see companies like Live Nation concerts, etc., reporting great earnings, better than even the pre-pandemic. Gyms, Planet Fitness is positive. Again, any Airbnb, travel, anything reopening, travel, in-person, entertainment, experiences, etc. is booming. And conversely, anything that was interpreted as a lockdown stock, Zoom, things like that, Peloton, obviously, you probably heard Peloton crashed and burned. So that's a huge theme, and I don't see that changing. I don't see that abating for some time. Another thing I want to bring up, and I'm not going to bore you with all the rationale behind it, but you think about the psychology of the reopening as going to the other extreme, as people were tired of being stuck at home, locked down, etc., not able to travel, etc. That was one extreme. Now they're going to the other. They want to travel everywhere. They're willing to spend anything. So Live Nation reported not only are ticket sales high, but concessions are high. So people they're willing to spend their money. They saved up. They couldn't do anything during the lockdown, and now they want to go out, and they're willing to pretty much spend anything to do it. So airline tickets are high. I expect it to go to the other extreme. That's, in my opinion, a basic psychological trend. So they're going to go out and they're going to spend like crazy. So I expect things like credit card debt to max out, travel to max out, etc. And I don't see this trend changing until we hit that other extreme. So anything that's a reopening play is probably already run. If you find something that's a hidden gem, might be an opportunity. Anything that's interpreted as a lockdown stock, Zoom, like I said, Peloton, anything like that is going to go down. In my opinion, that's going to open up some opportunities. We like Zoom. We see some future technological opportunities in Zoom, but it needs to hit a stable bottom before we can scoop it up again. So, other major trends, obviously, you keep hearing about the supply chain issues. Just some strategies to position yourself to take advantage of that, and things to avoid, pitfalls to avoid with the supply chain is think about companies whose revenue is dependent upon scarce or delayed inputs. So if they need a part from China, or they need a commodity, that's got to be on a container ship coming into LA or something, their revenue is going to be deferred. And they may then, their earnings are going to be hurt by that because their top line goes down, their profits are probably going to get hit. So they're going to reduce their costs to make their earnings look better. I already know some companies that are doing hiring freezes. They want to reduce their human resource costs because their revenue is decreasing. Are they going to delay purchases, delay expenditures? Are they going to, they're going to delay purchasing equipment, purchasing software, etc. So, number one, I would stay away from companies that have revenue dependent upon, scarce inputs. And then also think about who's supplying them. If they typically buy hardware or software from a particular supplier, that supplier is going to end up in the same boat, and we're going to have a domino effect, right? That supplier then may put a hiring freeze, reduce expenditures, etc. So those particular industries that are hit by input scarcity due to supply chain, I would avoid until that gets ironed out. Also, if I don't have product to sell for Christmas, am I going to spend on advertising? Well, probably not, right? So are we going to see less spending on brands, etc., for companies that can't get the product to sell, particularly for the holidays? Also, are companies double, triple ordering? We went long on stocks, which is the short on semiconductors, under the assumption that we've heard that, from Kathy Wood and others, that, we know there's a semiconductor shortage, but we believe, and Kathy Wood believes, etc., that companies are double, triple ordering. Well, that's going to cause an inventory surplus in the future, and then they're going to have to discount that inventory. So watch out for those cases. If the company is over-ordering now, are they going to have to cut prices in the future? That's gonna hurt them. And again, companies that are dependent upon advertising, is a company like Roku, and others that are dependent, Facebook, although Facebook probably has some local advertising, Google, etc. If they're not going to be able to replace brand advertising with local advertising, are they going to get hit? So, some positives, they said the warehouses are full. And so anybody who has a warehouse can pretty much charge what they want. They're going to fill the space. Logistics is obviously hot. There's a company, I think it's GXO, does some automated logistics. They've got some AI. They're doing very well. And, going into the holidays, if you can't buy your Nintendo Switch because it's out of stock because they can't get it, what are you going to buy your kids? Is it going to be digital goods? NFTs, video games? What are people buying for Christmas? We're starting to try to survey people and find out, what are you going to buy for Christmas? If you can't get something, then are you going to get a gift card with Amazon gift cards? So think about it, and if you have some ideas, please post them in the comments below, and let's talk about it for the benefit of our whole BeachBum trading community. Another negative trend is education. Not only are we seeing the Great Resignation, we're seeing people are not going back to schools. Colleges, Chegg, which is a major education company, tanked on bad earnings, bad guidance. They made the statement the education industry is experiencing a slowdown. So anything in that industry related to education, colleges, is currently experiencing a slowdown. So again, I would stay away from that for the unforeseeable future. Themes coming back into style. Well, we just saw the infrastructure bill got passed, that part of it, and so we see solar EVs as a major theme coming back. And then here's another great one is Jim Cramer has started what he calls his borderline unstoppables for the rest of 2021. And he claims that this theme of stocks are going to be positioned, the money managers are going to position into these now, and they're going to continue to go up until through the rest of 2021. I'll put the link to this video where he started talking about this list of borderline unstoppables for 2021. I know it includes EVs, cloud, there's some other things. Another thing to think about is we know there's inflation, etc., but it seems like the luxury good retailers are doing okay. Coach, etc., Estee Lauder. I think your high-end products will do okay because they can increase prices despite increased input costs and supply chain costs because, again, they're high-end products and the people at the high end of the spectrum, they're willing to pay whatever to get their Coach bag or whatever. So price is not really a factor there in luxury goods. Your mid to lower tier retailers, so is questionable. If you double the price of a mid-tier cosmetic or a mid-tier handbag, it is the person whose gas just went way up, or other food, etc., is going way up. Are they willing to pay double the price or increase price? Well, maybe not. So I think luxury good retailers will do well, but mid to lower tier is questionable at this point. So that's some of the themes and some of the strategies, positive and negative, going forward that we want to look at. Let's see how these themes are impacting the current futures markets and sectors, etc. And then again, we'll pick stocks that fit those themes and futures. Okay, we'll quickly recap where we ended up on Friday, look at the futures, look at the markets, data in Webull. Right now I'm on the Finviz homepage. You can get our affiliate link to Finviz in the description box below. We see Friday all green, new all-time highs across the board. We see advancing new highs, everything very, very bullish on Friday. The NASDAQ did have a decline later in the day and then rebounded slightly, and we'll talk a little bit about the reasoning behind that. Mostly green. We see, the Pfizer news was positive, and that hit some of the other vaccine, etc. stocks. So healthcare took a little bit of a hit in general based on that news. The only other things I wanted to highlight here is we see we did just get the infrastructure bill passed in the House, and they sent it to Biden for signature. So the infrastructure piece of it, it looks like that's going to go through soon. And so we talked about that theme, EVs, infrastructure for EVs, green energy, etc. Maybe a theme based on that. Yeah, we can see, we'll look at the futures in detail, but pretty much all green, crude, oil and nat gas kind of settled down in the middle of a trend. We'll see that in the futures. But the big thing to talk about is the unusual or somewhat counterintuitive trend in the treasuries. We know there's tapering, so the Fed's going to decrease purchases. So why did yields go down and prices go up? And we'll talk about that in a second. We'll jump over to the futures in a minute, but I just want to quickly look at the indices to see where we are in those trends. We saw this major uptrend all week. All very positive, but you notice now the SPY is sitting at the top trend line of its channel, and we can see how this has tended to behave as it goes up to the top line of the channel, bounces down, goes to the bottom line of the channel, bounces up. Okay, so we can kind of expect, similar behavior. So we wouldn't be surprised if we got a minor retracement. But the channel is still, the trend is still up, the channel is still up, so in the NASDAQ, same thing, right? Went and hit the top of the trend line, Again, these movements, if I had to speculate, I think others have made this statement before too, is I think a lot of this is algo driven. The algorithm says, okay, I know where this trend line is, and I'm going to keep buying till it hits this upper channel, and then I'm going to go into sell mode. I've heard other traders, with experienced traders, say the same thing, right? The algos are set, and they know where that is. They say, okay, I'm in buy mode, buy until I hit there. Okay, switch to sell mode, sell till I hit there, flip to buy mode, right? It makes sense. We can kind of see what's going on, right? So we'll look at the Dow. Same thing, right? Went right up to its upper trend line, and it has respected that channel for quite some time. Russell IWM broke out. So, and you'll hear other people say too, is small caps tend to be a seasonal trend into the late fall through the end of the year. Small caps tend to be a seasonal trend, and we saw a major breakout in the IWM. So, there'll probably be some volatility, but we expect that seasonal trend to hold through the end of the year. Let's look at the VIX briefly. This has got kind of an interesting reaction. We'll see the Fed tapering announcement reaction. It dipped down, and then on Friday we got some volatility, which was interesting because the SPY was still going up, but we got increased volatility. I found that interesting. You'll see, we'll talk about the fact that when that spike occurred, we exited our long on the VIX at the top of that spike because, again, we don't expect, there isn't any major risks that we know of that would cause a spike in the VIX at this point in time, so we thought we could exit that hedge. We're also not going to try to short any of those indices right now because, again, we don't see any catalysts that would trigger a major correction in any of these indices. They're probably going to trend down to their trend line, but again, the overall trend is up. So at this point, we're not really looking to hedge for a downturn. We expect some retracement within these channels, bouncing back and forth, but if we're talking about a crash, we just don't see any reason, any catalyst that would cause it. So, Okay, let's take a real quick look at the futures. I'm on the futures tab with FinBiz. Again, you can find our affiliate link to FinBiz in the description box below as always. And we can see all the major indexes ran, got very extended. They're still running up. We saw that in this index ETFs, the SPY, etc. See the Russell's breaking out. We saw the VIX decline. We talked about oil is kind of hovering in the middle. We talked about the fact that OPEC did not decide to increase production more, but we have seen that storages in both oil and nat gas have kind of increased. So somebody's increasing supply because we don't see any reason that demand would be decreasing, but the price really is just kind of stabilized in that area. So we really don't have a strong play until we get a new strong trend in oil and nat gas. We can see gold is finally breaking out of that 1800 range. You see silver is recovering, headed towards a breakout potentially. Again, these are inflation hedges, right? Is we keep getting data that says inflation is hotter than expected. There's still talk that they think it's going to be transitory, but how long is transitory? Nobody's sure right now, and we definitely are seeing increased inflation and higher oil and gas prices. There was indication that the winter may be colder than expected. We might see a spike in that gas. If so, we will jump on that, take advantage of that. Let's talk about the treasuries just real quickly. We saw this counterintuitive jump in price in the treasuries, which again, since the Fed is tapering, they're decreasing purchases coming up the end of November. We would expect price to decrease and yield to increase, and we saw just the opposite on Friday. We saw price increase and yield decrease. What I have heard is the reason for this is people, hedge fund managers, etc., front running that Fed decrease in purchasing, and that there was a lot of buying on Friday. So essentially, they were unwinding their position that was hedging the tapering discussion, and there was a lot of purchasing front running, and it's essentially almost a short squeeze on the treasuries. If this continues into early next week, we're looking for a bottom in TTT, which is the short on the yields. So the yields, when the price went up, the yields went down to that 1.4 area that we saw. And TTT got close to a bottom. If we look at TLT, which is the long version, we can see it approaching a top. So we're waiting for it to get up to this resistance level, at which point TTT should bottom, and we're hoping to go long TTT because again, with the Fed tapering, we expect the longer term trend to be prices down, yields up. So we think that that's a great opportunity. We've had that TTT on the watch list just to watch the reaction to the tapering, and here we're starting to see it. If we get that, we're going to jump on it early next week. So you'll see that in our watch list next week. So let's look at some of the other trends in the markets, and then again, we'll start trying to pick stocks that meet all of these themes and trends and futures that we see. Okay, now on the market screen of the online browser version of Webull. And as always, you can find our affiliate link for Webull. Get 2 or more free stocks with your version of Webull. I'll put that in the description box below. Please see our recently published video on how to use the market screen in Webull. I'll put the link in the description box below. It goes into a lot more detail. There's a ton of information that's available here. We use it on a daily basis and in our game plans each week to recap the market and look forward. So please see that video. I'm going to go through this very quickly. I'm not going to go into a lot of the details. That is available you can see that video to see the additional functionality and information that's available. We see the indexes, we've looked at that. That nice histogram that we have in the markets tab in Webull. We can see, okay, more advanced with the decliners, but we can see it's still mostly a bell curve, but there's some dichotomy, right? You're either an advancer or a decliner. There's not a whole lot right neutral. If we look at the inflow, this is kind of, interesting. We've got more in the New York Stock Exchange than NASDAQ right now. So we saw that little dip in the NASDAQ. We've got news, etc. We've got an abbreviated version of the earnings calendar, which is very helpful. We can see before market, after market. So definitely use this to see upcoming earnings. Let's quickly look at the after hours top gainers and losers from Friday the 5th. See if there's any trends, any themes going on in the gainers or losers. I don't offhand see a strong trend in the after hours gainers, after hours losers. Again, I'm guessing most of this is earnings driven right now. There's probably some themes we'll see in the industries and ETFs, but the after hours pre-market behavior is probably mostly earnings driven. So let's quickly look at the best performing indices, and one of the nice industries, one of the nice things you'll see in that other video about how to use this market screen is if you hit this all, you can very quickly preview all of them. We can see transports was very positive, construction, hotels, okay, reopening stuff is going to be very positive. Education is going to be generally negative. Aerospace defense, this is an industry, I'm surprised it's positive, probably particular earnings driven. That's one where I know that they have dependencies on scarce inventory parts coming in, etc. So, but things like airlines might be in there that might be causing the positive area. So again, oil and gas, we know, transports, water. So again, this is a nice where we can quickly get a view for industries, what are the themes for the best performing industries. And you can use the carousel to just get an abbreviated version of the best performing. If we look at the ETFs, markets betting up on the Dow, not strong, up on the NASDAQ, up on the Russell, and up on the VIX. So industries again, we could hit the all and flip through all these quickly. See industrials, communications very green, utilities very green, energy, real estate green, financial. Okay, that's kind of interesting. There's discussion that financial didn't react real positively so far. And then the best were leisure, energy. Again, the aerospace, that's got to be airline positivity because it's not going to be defense industry. Commodities, oil, we could see oil. Okay, so people are betting oil is going to go back up. Now, if we see that and it hits a new all-time high, we'll scalp it again with drip. You should know that play by now. Is whenever oil hits its all-time high and turns down, we're going to scalp it with drip. We can see, okay, here's TLT. We just looked at the prices increasing. TLT's got a lot of inflow. Late Friday, as we were talking, we think this is hedge fund managers unwinding their hedge on the taper. So I don't think that'll continue long, but if it does short term, we're going to take advantage of that. So hopefully that helps. Again, there's a lot more information in that video on how to use this market screen. Please see that, and you can dig into this in more detail in your copy of Webull.
Okay, given all the information we have about themes and the trends and the futures, let's make our watch list updates as of 11/6 for the week of 11/8. You'll see in the comments of last week's game plan, we got stopped out of our position in Airy for pretty much break even. We're going to add Airy back to our watch list. You can see our due diligence video reference below, and I'll put that in the description box as to our justification for why we want to watch Airy again and hopefully enter at a lower position. Again, you can see our video on how to maintain your watch list from the stock screen. It's very simple. You can do a search for any symbol, click on it, add it to the watch list, any of your watch lists, remove it from watch list so we no longer hold it. It's in our watch list. And we can see ideally we want Airy somewhere on the 1-ish or below when it reaches support and turns up. 106 tends to be a heavy resistance area. It did happen to break through that, and we thought maybe it would run, so we put a stop in and we got stopped out. So we're going to watch Airy again for that one level and go long again, waiting for contract news, etc. APT is getting tagged as a mask pandemic stock, and they missed earnings expectations and it pretty much plummeted. We're going to take it off. I don't know where the bottom on this is. Again, it's being viewed as a pandemic stock, and even though it's building supplies and other PPE, I think the sentiment's negative and it's going to continue to go down. We're going to continue to leave drip on the watch list to look for oil scalps. If oil spikes to a new all-time high, 85, 86, we will scalp it again using drip. And again, you can look for the top on oil using drip is the short and gush is the long. So if you watch gush for a top, you can find the bottom on drip. We're going to remove Fang D and Fang U. We are currently long Fang D. It did start to recover with the tapering, the yields, and some other factors. Some of the Fang stocks are getting hit, and so the Fang D started to pull back up. As soon as we get break even, which would be around a 194 level, we'll put a stop in underneath it, see if we can get some profit out of it. But again, we don't see that we need that hedge right now, and there isn't a strong trend that would cause the Fangs to go down. There is some stuff with the China techs that might be volatile. Alibaba's got their Singles Day coming up. Tencent's got some things going on. So we're going to remove those Fang stocks from the watch list. Load, we just premiered a video on Comstock Mining. Please see that video if you have not already seen it. That's an exciting one that we found that's a hidden gem in the EV lithium-ion battery recycling play, as well as a gold miner. Again, please see this due diligence video. Right after we did this, before we even were able to publish it, they came out with news that they had expanding their deal with Aqua Metals on the lithium-ion battery recycling, and it started to look like it was going to make a run. We got in, it settled back out. I don't know if that news has not sunken in quite yet, but we think that that's an exciting hidden gem as the infrastructure bill gets passed and funded, and as people realize that we can't possibly produce the number of batteries we need for EVs, solar, storage, etc., we're going to have to recycle what we've got. So we think this and Aqua Metals, but this is the hidden gem, I think. So LTC, we were hoping to get back into LTC around 32 level or below. We tried a couple orders, they didn't hit. Now it's kind of run back up, so we're going to remove it from the watch list for now. We do want to get back into LTC if it gets down in that 32 range, but it looks like we're just going to have to wait a little while. Same thing with NUS. It took off right after we published our due diligence video, which you can see in the description box below. We thought their earnings were going to be bad. Given some of the other cosmetic company earnings, and their earnings beat expectations, and it took off, and we're not going to chase it. So we're going to take NUS off the watch list for now. Again, we'll wait for it to come back down, and now we're familiar with what they do, and we'll jump on them when we get that opportunity. SOXL is the long on the semiconductors. We posted that we're long in SOXS. Again, the semiconductors have continued to run since then, but we expect this is a very cyclical business. We think there may be some double, triple ordering going on, as Kathy Wood has mentioned, others have mentioned. And again, it's very cyclical, so we're comfortable waiting for that cycle to turn and SOX to turn back up and become profitable. May have to wait a little while, but SPXU, we're still long, but again, we don't see any reason to try to short any of the indices. We talked about TTT. We're looking for a bottom in TTT, which would be shorting the yield, a bottom in the yields, a peak or a resistance level in the price, which is TLT. Hopefully we'll get that opportunity early next week. We'll go long because, again, with the Fed reducing tapering, we expect prices to drop, yields to increase, which would drive TTT up. So we want to keep a close watch on TTT. Up on the Dow, we don't need to watch the indices anymore. Up on the S&P, UBXY, scalping. This is long the VIX. Again, if it comes back down, it did decline on the Fed announcement and the employment numbers. It came down and then popped up a little bit on Friday. Again, we think this is hedge fund unwinding that caused this initial pop in the VIX. We would expect it to revert back down when UBXY gets down in this bottom range and turns up. We'll go long again, potentially on the VIX. We're just watching the VIX as a mirror. And we're going to leave WYY in. It's a little bit of a low float. They've got earnings on the 15th, so if it presents an opportunity near some bottom, stable bottom, somewhere in this 5-ish range, maybe even this 520 range, we might pick up this WYY. They're profitable. Looks like a potential opportunity. So that's what we've got for the watch list for right now. Please keep an eye on the comments to this game plan. As we do go through our stocks and look for things to add or changes in the watch list on a daily basis. Okay, and I missed one. WWR is another one we got stopped out on previously, and we're going to continue to see if we can pick up WWR again. So WWR, again, we talked about this last week. Their graphite miner, they got authorization to do their phase 1 plant. We expect news, a potential pop on the news, but then we expect dilution because they will need to fund further phases of that plant. So we got stopped out when it made a run and then retraced back in. We'd like to pick it back up, 320, 305, somewhere in there when it comes back down. So yeah, add WWR to the watch list. So again, please watch the comments. We will make updates. Please watch our Twitter feed and the comments for entries and exits. Also, we'll try to post to our other social media as we are able. And a question I want to pose to all our fellow BeachBum traders is, we're doing a lot of market analysis, market recap at the beginning of the game plan to get a feel for the trends and themes and where things are moving. And then we have our watch list updates of individual stocks and ETFs, etc. The question is, should we split these videos into separate ones, the market recap pieces, and possibly do that on Saturday morning, like at 9, and then do the watch list updates, which are individual stocks, etc., based on those themes, and do that Sunday at 9, like we currently are doing our whole game plan. We'd love to hear your feedback in those regards, or do you like it all in one? You tell us what you want. We're here to help you and do this in the way that it works best for everyone. So we hope you have a great trading week. We hope you like this video. Smash the like button, share it with your friends. Please subscribe if you have not already. And we wish you good luck and have a great trading week. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye.